Well, welcome everyone. Welcome to Redhawk's weekly update for the week ended December 3rd. Hope everyone had a great weekend. In this session, we're going to go over the general market commentary, what happened in the markets last week, kind of what we're seeing coming down the pipe this week. My name is Rick Keast. I'm the president of Redhawk Wealth Advisors, and I also oversee our investment committee. So like I just talked about, we're going to talk about the information that's coming out this week, kind of give some insight as to what happened in the markets last week. And I've got some fun facts. Don't have any data points this week. Just not a lot of information coming out just because of the volatility that happened last week and so forth. So, and then we'll obviously we have to show our disclosures. So as far as this week, nothing's coming out today. Tuesday, we've got the consumer credit from the U.S. Federal Reserve. Wednesday, job openings and labor turnover survey. Thursday, weekly unemployment claims. Wholesale inventories as well. And then on Friday, we've got the CPI coming out, and then the University of Michigan Index of Consumer Sentiment, and then the federal budget, U.S. Department of the Treasury. So probably the big days are going to be Thursday with the unemployment claims, and then Friday with the CPI and the consumer sentiment, because consumers make up 70% of the GDP in the U.S. So not a lot of information coming out this week. As far as what happened in the markets last week, downward trend, fears related to the Omicron variant and tightening U.S. monetary policy weighed on stocks for the second week in a row. And the major U.S. indexes fell around 1% to nearly 3%, with the Nasdaq faring the worst. Over the past 2 weeks, the S&P 500 has fallen 3.4%. So jobs report. This wasn't great news. The U.S. economy generated 210,000 new jobs in November, far below economists' consensus forecast and lagging the previous month's strong result. However, the unemployment rate fell sharply from 4.6% to 4.2%, and the labor participation rate rose as more Americans entered the labor force, which is good news. Elevated volatility. We always talk about this. This is one of the things we look at. A measure of investors' expectations of short-term U.S. stock market volatility surged on Friday to the highest intraday level in more than 10 months. The CBOE Volatility Index, also known as the VIX or the Fear Index, jumped to as high as 35 in the afternoon trading, extending a recent surge that dates back to the emergence of the Omicron variant in late November. So pretty much the VIX is, and I've got some slides on this too in a bit that we'll go over the VIX and kind of how it's increased over the last week or so, or when the Omicron variant was announced. Yield drop off. Yields of government bonds fell sharply in response to concerns about the Omicron variant and the outlook for potential acceleration in the U.S. Federal Reserve's moves to tighten its monetary policies. So a couple big things, been kind of everybody has been focusing on is the Omicron variant, and then also the Federal Reserve speeding up their tightening. So on Friday, the yield of the 10-year U.S. Treasury bond fell as low as 1.36% in the afternoon trading. Just 9 days earlier, it had been as high as 1.69%. Taper talk, congressional testimony on Tuesday from the U.S. Fed. Chair Jerome Powell weighed on the markets as he indicated that the central bank was growing more concerned about persistent inflation versus transitory inflation. Powell suggested that the Fed could try to contain inflation by accelerating its plan to taper down on its bond buying stimulus program, which I think they're going to accelerate that. Mixed November. In the wake of a strong October, November marked something of a setback for the major U.S. stock indexes, largely due to a retreat in the closing days of the month. Actually, November was looking pretty good until the last couple of days. The S&P 500 slipped 0.8%, the Dow fell 3.7%, and the Nasdaq managed to post a 0.3% gain. At the sector level within the S&P 500, information technology had the strongest performance and energy had the weakest for November. Pandemic anxiety, the spread of the Omicron variant and its economic impact remained a focus for many investors. As of Friday, at least 5 US states had reported at least one case of the variant. Globally, cases have been reported in more than 36 countries, and scientists don't yet know how effective existing vaccines and boosters may be in targeting Omicron. Shutdown averted. The US Senate on Thursday approved a bill to fund the government through mid-February. So they just keep on kicking the can down the road on this, averting the risk of a shutdown after overcoming a bid to delay the vote in protest against vaccine mandates. However, Congress still faces another financial hurdle as the government may lack funding to meet its debt obligations in coming weeks, unless lawmakers agree to lift the debt ceiling. So a lot of posturing with the debt ceiling, mandatory vaccines, Build Back Better budget, and those types of things. So, or the spending, I should say. So I've got some fun facts here. One opinion, I thought this was interesting. Jeremy Siegel, who I listened to quite a bit, professor of finance at Wharton, predicted on November 24th, a target value of 5,000 for the S&P 500 during 2022. That was right before the Omicron variant was released on Friday, the 26th. The S&P 500 closed last Friday, December 3rd, at a little over 4,500. So it's got to jump up, or it's going to have to jump up another 462 to hit Professor Siegel's prediction here. How much we use? The U.S. consumed 18.2 million barrels of crude oil per day in 2020. The all-time consumption record in the U.S. was 20.8 barrels of crude oil back in 2005. And if you remember, a couple of weeks ago, Biden released some oil reserves. I believe he released 50 million barrels. So it's about, call it 2.5 days maybe of oil that we use. So that's why a lot of economists and folks in the market just felt that really wasn't going to do anything to change gasoline prices. You want my vote, and getting back to the reduction in gasoline prices, mostly because of the Omicron variant and the fact that people may not drive as much because of the variant. So demand has gone down in oil, and thus the decrease in the crude oil prices. You want to move my vote, Senator Joe Manchin. He's the Democrat that's really focused on bringing down the Build Back Better spending. And an important swing voter in the Build Back Better debate called on President Biden. This was back in November 23rd to restore the Keystone XL pipeline that Biden suspended right when he came into office. Biden revoked the permit for the pipeline on January 20th. Manchin estimates the pipeline would provide the U.S. with 900,000 barrels of crude oil per day from Canada. So looks like there's a lot of debate going on between sustainability and the climate and oil. And I think I think what's going on is that very, very focused on reducing climate change versus kind of spreading it out and making sure that oil, we still use oil because we're still heavily reliant on oil, and spreading that out and maybe bringing it down over the years versus kind of making some major moves here. Where now we were oil dependent, and now we're, we were oil independent, and now we're oil dependent. So it'd be nice to go back to those, back to the oil independent days, so we don't have to rely on other countries for our oil supply. Fed jobs, with the resignation of Randall Quarles at the end of 2021 and the expiration of Richard Clarita's term on January 31, the Fed's 7-member board of governors will have 3 vacancies. These will be appointed by Biden. And so that could really change the Fed. Powell still, was elected to chair that still. But you get different opinions, different people in there, and that could change and swing the Fed's decisions. States paying for Medicaid, 27.2% of the total spending of the 50 US states in fiscal year 2021 was for Medicaid expenditures, so almost 30% of their budget, a total of $722 billion. So pretty significant part of every state's budget. Start saving now. This is interesting with college education. You see these all the time. A child born in 2021 that begins kindergarten in the fall of 2026 would attend college between the years of 2039 and 2043. If that child attended public university or four-year state school, and we continue to see the increases for public colleges that have occurred over the last 30 years, which is roughly almost 5%. Continue in the future, the aggregate four-year cost of the child's education would be $229,000 or roughly $57,000 per year. So college continues to go up. It's going to continue to get expensive, and people need to plan better for it as children are younger. Was private, now public. The cost of tuition fees, room and board, and an average public four-year college for 2021 to 2022 was just shy of $23,000. The cost of tuition fees, room and board at an average private four-year college, and this is going back 20 years ago, was $22,000. So private colleges are quite a bit more expensive, probably in the close to $60,000 range compared to the public schools or the public universities. Every day, an estimated 11,000, a little over 11,000 Americans will turn 65 years old each day next year, 2022, or one every 8 seconds, which is kind of hard to believe. This group represents the 12th year of 19 years of the baby boomers turning age 65. An estimated 11,525 will turn 65 old each day in the year 2029. So just kind of coming to that tail end of the boomers, and there's actually more at the back end. Big money, the Players Championship for the Men's Pro Golf Tour that will conclude on Sunday, March 13th in 2022. Will have the largest purse, at least 20 million, and the largest payout for the winner, 3.6 million of any tournament on the men's tour during the 2021 to 2022 season, including the four majors. So the Player Championships is offering the most money is for the golfer standpoint. So big tournament. So that wraps up the commentary for the week. Here's our general disclosures that we're required to show. Hope everyone has a great week, and we will talk to you next week. Thanks.